This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
Major ruling. A U.S. appeals court upholds the suspension of the president's travel ban, and the business world is paying close attention. Triple play, the three major indexes surge to records as talk of tax reform moves the market higher. The big fix, what the president wants to do to make flying in America better. Those stories and more tonight on Nightly Business Report for Thursday, February 9th. Good evening, everyone. I'm Sue Herrera. Tyler Matheson is off tonight. A record day on Wall Street with the Dow, NASDAQ, and S&P 500 all hitting records. We'll have more on that in a moment. But we begin tonight with a major legal ruling. A U.S. appeals court unanimously upheld a temporary suspension of President Donald Trump's immigration order, which banned travelers from 7 predominantly Muslim nations. It is something the tech industry and businesses across the country have been watching very closely. John Harwood comes to us tonight from Washington. Good evening, John. And this was a unanimous decision against the government. What is likely to happen next?
Well, there are two choices facing the Trump administration. One is that they can go to the Supreme Court and try to fight this and win this battle there. The other is that they can pull back the executive order and make changes in it to try to make it conform with what the courts have ruled so far. The fact that we have 4 judges so far, 2 Republicans, the initial Washington state judge appointed by a Republican president, and then on this 3-judge panel, 2 appointed by Democratic presidents, 1 by President George W. Bush, indicates that the road ahead for this executive order may be difficult. So we've got to see what the legal team at the White House decides. Also have to wait and see how the president decides to respond, because the way that he has talked about the judiciary has raised concerns on Capitol Hill in both parties. And we'll see whether or not he goes off on this judge ruling or withholds comment and lets his legal team speak for him.
As far as the Supreme Court goes, Sean Spicer, the press secretary, has said in the past that that was something that they would consider. There is a vacancy on the court. We know that the president has a nominee out there. Would there be any chance that his nominee, if confirmed, would be sitting on the court if indeed this case came to the court?
I don't think so, Sue. I think this is ripening on a much faster timetable than Judge Gorsuch's nomination is likely to proceed. And I think given the contours of the court and the fact that the Republican-appointed judges have ruled against the president so far, the prospects for him winning at the court, I think, aren't especially promising at this moment. If you had a split between the 4 on the left of the court and the 4 on the right, that would leave the Ninth Circuit ruling to stand. But it's also possible that some of the conservative wing of the court might side with the liberals, because that's what happened with those 2 Republican-appointed judges on the West Coast.
Indeed. John Harwood, thank you as always, John.
You bet.
John came to us tonight from Washington. A bit later in our program, we'll take a look at which sectors might be impacted by this ruling. Well, Wall Street may have been covered by snow today, but stocks were hot. It was a record close for the 3 major indexes. Upbeat earnings helped lift stocks immediately out of the gate, but the rally picked up steam after President Trump uttered one word: taxes.
We're going to be announcing something, I would say, over the next 2 or 3 weeks that will be phenomenal in terms of tax.
Stocks have generally risen over the past 3 months as investors bet that the new administration will cut taxes and will roll back regulations. And that was all investors needed to hear. The Dow Jones Industrial Average rose 118 points to 20,172. The NASDAQ added 32, and the S&P 500 gained 13. Bob Pisani has more on Wall Street's record day.
We've got the Trump trade versus the Trump tantrum. If anyone had any doubt that tax reform talk is what moves the markets, those doubts should be laid to rest today. The S&P 500 moved almost 8 points in the hour after President Trump said he would have more on tax reform in a couple of weeks. Bank stocks particularly moved because bond yields rose. Small cap stocks rose because small companies would be among the biggest beneficiaries of a tax cut. Now, never mind that Congressman Paul Ryan indicated that Obamacare would be the priority and that tax reform wouldn't come until the spring at the earliest. Never mind all that. The president said we will have more on tax reform, and we'll have it very soon. And the markets believed him, and the markets moved. All right, so what does this tell you? It confirms that tax reform is what moves the market. It also confirms that the path of least resistance for the stock market right now is higher. Why is that? Because the markets move up whenever the president talks about tax reform or infrastructure spending. But when the stuff the market doesn't like is in the spotlight, like Obamacare or immigration or trade wars, the market either moves sideways or drifts slightly lower on light or moderate volume. Well, simply put, good news moves the markets up, but bad news only makes the markets kind of drift around. That tells me the path of least resistance, for now, is certainly higher. Now, we have the Trump trade on good days for the market, and we have the Trump tantrum on bad days. For Nightly Business Report, I'm Bob Bassani at the New York Stock Exchange.
Infrastructure spending was also one of the topics the president discussed today with airline and shipping companies at the White House. President Trump told the executives that it's time to fix America's airports and upgrade how Americans fly. That helped airline stocks take off. Phil report tonight from the White House.
President Trump sat down with more than a dozen of the top executives who run airlines and airports to hammer a familiar theme. Flying in America needs to get better.
So our airports used to be the best. Now they're at the bottom of the rung.
Most travelers likely agree with the president. Many of America's airports are too crowded, too outdated, and need to be fixed. President Trump wants to ease regulations to help airlines while increasing spending to improve the industry's infrastructure. Among the top priorities, upgrading the air traffic control system so there's less congestion and fewer delays at the busiest airports. After the White House meeting, the CEO of Southwest Airlines said the president was told why the current system needs to be fixed.
There's about $25 billion of waste annually with the system that's currently being used. So that's where our focus is, that's where the Airlines for America focus is.
Just as important, an improved air traffic control system could possibly lead to lower fares.
So that inefficiency in the air traffic system really creates bottlenecks that then turn into operating costs and turn into higher fares. So that would be the biggest single thing that could move the needle as far as regulatory change.
With the number of people flying in the U.S. at an all-time high, the need to handle more travelers is growing. Still, America may be a long ways from seeing all new terminals and airports being built. That's because the biggest airport construction projects often take years to get going, let alone completed. But today, President Trump told the industry he wants to get them the billions of dollars that will be needed. Phil LeBeau, Nightly Business Report, Washington, D.C.
Some states are vying to be part of what could be a very large infrastructure spending spree. Yilan Mui is following the story for us from Washington. Yilan, what do states want to see now from the White House?
Well, 49 states have sent a wish list of their top priorities for infrastructure spending to the White House and to the White House's National Trade Council. Now, this list includes more than 400 projects, and some of the states are asking for things like new energy plants. They're asking for things like earthquake emergency response and warning systems. They're also asking for money for new roads and new bridges. Some of the asks from states total more than $100 billion. California, most notably, has a list that's longer than 50 projects.
Oh, wow. Okay, now what about Congress? Where does Congress stand on an infrastructure plan?
Well, House Speaker Paul Ryan had initially been lukewarm to this idea. He felt that Congress had already addressed infrastructure spending in a previous highway spending bill. But he seems to be coming around to the idea, but it could take Congress a while to actually get to infrastructure spending. He said it's going to be spring at the earliest before lawmakers can take this up, in addition to taking up tax reform. So Capitol Hill really has a lot on its plate going forward for this year.
It certainly does. Generally speaking, what tends to be the economic impact of infrastructure spending?
Well, there was an interesting report by the Economic Policy Institute that found that $250 billion worth of infrastructure spending could create 3 million jobs in just 1 year alone. So there could be a really big impact in terms of the number of people who could go back to work. However, there's a big cost involved in that as well. Right now, President Trump is taking office with the debt to GDP ratio at its highest level since President Truman took office in 1945. So there's a lot of Republicans and a lot of budget hawks who are starting to warn that the debt level is simply getting out of control.
Which begs the question, how does Washington plan to pay for it all if indeed it does go through?
That's right. President Trump's challenge is going to be to make all of these numbers add up. You know, he's touted as much as $1 trillion in infrastructure spending, but at the same time, he's also saying that he's going to do phenomenal things when it comes to tax reform. So all of those things are going to cost a lot of money, and you've got Republicans such as Mick Mulvaney, his nominee to head the budget department, saying that's a lot of money, and I don't know if Congress can really afford to continue to approve those types of projects.
Ilan, thank you so much. Ilan Mui in Washington. Well, just one day after making a big job announcement from the Oval Office, Intel is warning of lower profit margins in one of its businesses. At an investor meeting, a company executive said its data center profit margins will be lower than usual. That unit has been a key contributor to Intel's growth. That pushed shares lower by about 2.5%. Coke's earnings fizzle. The world's largest beverage company saw profit fall 55%. Revenues also dropped from a year ago, making it the 7th straight quarter of declining sales. Coke is a widely held stock, and today's news sent it lower by nearly 2%. Sarah Eisen digs into Coke's quarter.
The world's biggest beverage company is in transition mode. Results today painted a picture of better growth in North America, but weakness around the world. Add in a stronger U.S. dollar that chips away at Coke's overseas sales, a complicated refranchising where Coke is spinning off most of its bottlers to become a leaner company, and a new CEO, James Quincy, who takes over from Muhtar Kent in May.
We focused the portfolio on more categories. We upped the marketing investment. We improved the execution. We transformed the bottling system, refranchising it. And I think the whole team has pulled that together. And now they've had 2 really strong years, capped off with a great fourth quarter. The North American business is humming. Lot to do in 2017 with the biggest year of refranchising. But we're confident. The team is confident.
The big picture, soda consumption is slowing as people opt for healthier choices like bottled water and juices and teas. This will be Quincy's main challenge, along with adjusting to a new administration. Already, Coke has opposed President Trump's recent immigration order.
Coca-Cola has stood for inclusivity. We are in 200 countries around the world. We have always stood for that. We're always going to stand for that. So we think that that's part of our core values, and that's what our statement that Muhtar put out was all about. It doesn't affect a lot of our employees, but we wanted to be clear about what our brand stands for and what our company stands for.
Another big question will be global trade. Coke's international exposure means if we do see more protectionist policies like border taxes or tariffs, it could be a headwind for business. For now, though, management is focused on building a smaller, more focused company, selling smaller cans of Coke, which are actually doing better to keep up with changing consumer tastes. For Nightly Business Report, I'm Sarah Eisen.
Anthem's bid to buy rival Cigna has been blocked. A federal judge sided with regulators who argued that the takeover would reduce competition and harm consumers. Following the decision, shares of both companies were higher. Bertha Coombs takes a look at what might happen next.
A federal judge ruled against Anthem's $54 billion merger with Cigna, saying in her decision that the deal would leave large national employers with less choice. Judge Amy Berman Jackson rejected Anthem's argument that the combined firm could reduce costs and passed on $2 billion in savings because, she says, Cigna's testimony in court contradicted Anthem's claims. The hostility between the two firms was so pronounced, the judge called it, quote, the elephant in the courtroom.
With Cigna and Anthem and their conflict, and she, I think rightly so, challenges the ability for the two companies to realize those efficiencies.
Anthem says it will move quickly to appeal the ruling. CEO Joseph Swedish saying in a statement that if not overturned, the consequences of the decision will hurt American consumers. Antitrust attorneys give Anthem low odds of winning the appeal. Analyst Anna Gupta says the move will help Anthem in its next legal battle with Cigna over their hefty breakup fee.
They do have a merger agreement through April. It buys them time to think about their strategy to challenge this breakup fee of $1.85 billion. And I think that they will challenge it legally.
So what happens next for the health insurers? Analysts think that even with the uncertainty over health insurance reform in Washington, we could see a whole new round of deals. Cigna has hinted to investors that it has the cash to make a sizable acquisition, even without a breakup fee. CEO David Cordani lost out to Aetna 2 years ago in a bid to acquire Medicare powerhouse Humana. Now that the court has also blocked Aetna and Humana's $34 billion deal, analysts say Cordani may try again. Humana and Aetna's merger agreement expires next week, and they will update investors on whether they'll be breaking up or staying together just after Valentine's Day. Bertha Coombs, Nightly Business Report.
Still ahead, the president likes to tweet a lot, but it's not enough to make the social media company great again. No retweets for Twitter. Monthly user growth in the company's latest quarter was disappointing, and revenue growth was the slowest since going public. That, along with a weak outlook, pressured shares. Julia Borston takes a look at why Twitter is tumbling.
Not only did Twitter's revenue in the fourth quarter fall short of expectations, the company's earnings forecast for the first quarter of this year was about half what analysts projected. And Twitter added only 2 million monthly active users in the quarter, just half the monthly user additions of the prior quarter.
The real negative to point out, and what they were very upfront about, is they're seeing much more competitive pressure for video ad dollars, and they listed all the other social media networks. That problem is probably going to intensify.
But CEO Jack Dorsey said all of the changes to Twitter's product are working, with the third consecutive quarter of double-digit percentage growth in daily users and their engagement. And he says he's confident the company will be able to keep up that user growth. Dorsey says this year the company will focus on turning around its revenue. And while President Trump makes headlines for his use of Twitter, that's not having an impact on usage or revenue yet. But Dorsey says he's more confident than ever that Twitter is growing in its influence.
The whole world is watching Twitter. While we may not be meeting everyone's growth expectations, there's one thing that continues to grow and outpace our peers: Twitter's influence and impact.
But Dorsey's dual CEO roles at Twitter and at Square drew criticism from former Microsoft CEO and Twitter shareholder Steve Ballmer.
He started two amazing companies. Who can do that? That's very tough. Both Twitter and Square, and I give him credit for that. I think now's the time for him to focus down, at least from my perspective, on the stock I own.
When asked on the earnings call if he can continue running Twitter and Square, Dorsey said he has the management team in place to continue running both companies. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Beazer Homes swings to a loss, and that's where we begin tonight's market focus. The home builders said it saw higher selling prices, but an overall drop in new home deliveries and a nearly $3 billion pre-tax charge led to the poor results. Revenue for the quarter was flat. Beazer shares were off nearly 5.5% to $13.26. Viacom posted revenue above expectations, thanks in part to higher theatrical sales and strength in the media giant's international market. Profit fell, but it was still above estimates. As part of a long-awaited restructuring plan, Viacom will focus on 6 of what it calls flagship brands, including Paramount Pictures and MTV. Investors seem to like the news, sending Viacom up 4% to $43.89. Dunkin' Brands returned to profitability in its latest quarter, benefiting from higher franchise fees and royalty income. The company also reported better than expected revenue and hiked its dividend by more than 7% to 32 cents a share. But Dunkin's CEO says there's still more work to be done.
We've looked at our menu and we feel it's too complex. We need to simplify it. So we're doing a fairly extensive test. Certain things will happen. We'll change them back again. So it's a test to find out the way forward. But we want to streamline our menu. The result of that should be that employees have an easier job, which should obviously speed up transactions.
Dunkin' rose 4% to $54.13. Yum! Brands' profit topped estimates thanks to strong performance at its KFC and Taco Bell fast food chains. Revenue also rose, but that was shy of forecasts. The company did note that its Pizza Hut brand didn't perform as well and said improvement needed to be made.
We've got to transform our assets. We've got to transform our technology. We've got to get better at operations. We've got to get better at communication. So there's a lot of things to do. I think what we're doing now is working with the franchisees. Obviously, our franchisees at Pizza Hut want to have the same success we've had with KFC US and the same success we've had with Taco Bell in the US.
Shares of Yum! Were up better than 1% to $67.39. And camping gear maker Vista Outdoor reported a quarterly loss and posted sales below street forecasts. The company also cut its guidance for 2017, and investors pulled up stakes. Shares were off more than 18% to $20.95. A legal challenge has been filed to stall the construction of the Dakota Access Pipeline. The Native American tribe, which had been protesting its completion, filed the lawsuit in an attempt to protect its water supply. Meantime, the company behind the nearly $4 billion project says the pipeline should be completed and operational within about 3 months. Up next, what tonight's court ruling on the president's travel ban means for some stocks. Economic storm clouds are forming once again over Greece. The country needs its creditors to release cash from a 2015 bailout so it can repay some debt due later this month. And there's disagreement over how to do that. Germany says austere budgets are needed for a decade. The IMF is calling for more debt relief. And Greece says austerity is not needed, but more debt relief is. So what will the travel ban ruling now mean for stocks? Ross Gerber is CEO and president of Gerber Kawasaki, and he joins us now. Ross, nice to see you. Welcome.
Nice to see you, too.
What do you think the immediate reaction will be on Wall Street tomorrow to this court ruling?
I mean, it's super positive. I mean, for so many companies in America, from the high-end talent and the H-1B visa side, from tech companies like Google, Apple, Microsoft, et cetera, to the low-end workers in the agricultural fields of California, for example, at Hormel Foods. You know, what this does is it allows an increase in skilled and unskilled labor into the country, and we need that. So immigrants are the lifeblood of this country, and any denial of its economic benefit is clearly somebody who missed econ. So it's a very, very good thing.
What about the fact that the administration most likely will come out with a statement? We don't know what they plan to do. There are several avenues that they have, one of which includes an appeal to the Supreme Court. Does that
right? That's what they're going to do.
You think that's okay?
So Trump's already, he's already tweeted just now, "I'll see you in court." So we're going to go to the Supreme Court. He's going to lose. It's an unconstitutional executive order. The judiciary does supersede the executive branch in this area, and he's going to lose. And I think it's a great thing for the American brand to prove that Trump can't just do what he wants.
But my question, which is more germane perhaps to our viewers, is does that, the discussion and the back and forth and the appeals to different courts, does that have the potential for volatility, specifically as it relates to some of the tech stocks where the CEOs have been vocal?
No, I think that we all, now that we've got the Ninth Circuit decision, we all know that this will stand, and this is going to be a benefit to stocks and the American brand, which is a benefit to stocks. So this is a very big positive. There's no other spin.
What about the fact that we have had the market run? Now we had record highs in the market today and in the indices. Are you still bullish on stocks? There are some who say that we're looking a little extended.
Yeah, you know, that's where we're at, too. We've made so much money in the last 3 or 4 months, and that's just uncharacteristic.
All right. Well, we apologize. We had some technical difficulties with Ross. Ross Gerber is with Gerber Kawasaki. As I mentioned just a moment ago, we had record highs in the indices today. So let's take a look at how things shaped up. We still have more earnings to go. The Dow Jones Industrial Average finishing up 118 points and change to 20,172.40. The NASDAQ Composite gained 32.73, about 0.5% to 57.15.18. And the S&P 500 finished up 13 points to 2307.87. And on that note, that does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, everybody, and we will see you right here tomorrow.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.